Is your portfolio in a wreck right now? Did you wake up terrified to see this cryptocurrency dump? And what does this mean for the price ahead? Hey guys, my name is Sheldon Evans, welcome back. Or if you're new here, don't forget to hit that subscribe button and turn on all bell notifications. As you know, YouTube does often gatekeep a lot of the cryptocurrency content here on YouTube. So unless you let them know that you want to see this time-sensitive information, you're going to miss out on a lot of this content. So on my display right now, I have the Bitcoin US dollar chart. And as you can see, we've got this huge red candle here from all the way at $38,000 or at the peak of $42,000 right down to $30,000 right now. And we're crossing this 21-day moving average. And this is exactly as expected. It's something that I've been calling for many weeks now, and it's something that I believe is very healthy for the market. As you guys know, the market has been in a parabolic move for the past couple weeks, and while that is fantastic for the price, it's fantastic for the news and media, it's not very good for the long-term health of this market. And something like this, or a correction like this, is very, very needed, and I encouraged it, and I expected it as well. As you guys would have known if you've been watching my previous videos, I did make a big switch from my Bitcoin to my Ethereum portfolio. Right now, that might not be doing so well either. We can take a look. As you can see, over the past 7 days, Ethereum is still up 5.6% compared to Bitcoin at just 0.5%. And that is fine. It's not something that is looked forward to. We're not really looking forward to these dumps, even though they are encouraged and needed, but we have to deal with them. So as you can see on the Bitcoin chart right now, we did hit the target of $42,000 almost exactly, and we crashed right back down and hit the 21-week moving average. I do believe that we could see a further downside movement all the way down to $27,500 at the very bare scenario. But right now, if we go over to the 1 hour chart, we can see that we have broken below that level, and then we retested the $36,500 level and we came back down. So I feel like we could see further downside movement all the way down to $27,500. There's nothing wrong with this. It's something that is expected. You can see that we tested it back earlier here on the 4th of January, and it served as a resistance back earlier on the 27th of December, and then we broke through it on the 30th of December. So while this may be scary right now, there's nothing wrong with it at all. It is expected. The thing is, we can look at the market to try and understand exactly what is happening. So obviously I woke up this morning to see these memes all around the cryptoverse on Twitter, and while they are quite funny, there's nothing that we can really do about this right now, because the market is being manipulated by whales. And you would have noticed that I made a tweet this morning that said, I never get news notifications pushed to my phone ever, yet today I get this. Coordinated efforts by whales to pry your precious Bitcoin from your hands. Hodl tight and you will be rewarded. So I got a push notification to my phone this morning that said 2-day Bitcoin plunge shakes faith in the cryptocurrency boom. And I've seen a lot of negative news all around the internet talking about this downturn in the market. And this is what happens. These moves are coordinated by whales that have billions of dollars that are able to manipulate the market, and they are manipulating you if you let them shake your hands, shake your weak hands out of Bitcoin. Now, if you know exactly what's happening in the market and you understand why these downturns happen and why they are actually healthy, then you're probably sitting just fine right now. And we can do this by looking at the on-chain analysis at Bitcoin. So even though we've got this major dump right now, the fear and greed index is still quite high at extreme greed, and this needs to come down. We need to get it around to the 70% or 85% mark in order for us to get this market moving again healthily upwards. If we go over to Glassnode, you can see that there's something very interesting happening. This is not smart money that is selling. This is the dumb money, or as we say, new money, that buys at the top and then sells at the bottom, not buys at the bottom and sells at the top. So we can see that if we look at the on-chain analysis of Bitcoin, that the number of addresses with a Bitcoin balance above 1,000 Bitcoin has been steadily increasing. Just as I've mentioned before, these institutional buyers are keeping this market afloat right now. If we go over to the Bitcoin chart, we can see that on the daily chart that this dump gets bought up very, very quickly. We have these long wicks on these candles because as soon as these dumps happen, these institutions and the automated buyers are buying these dips up as much as they can to try and accumulate as much Bitcoin as they can and pry it from your hands. They want big players, they want big positions in the market because they understand and believe in the future of Bitcoin. If you see negative news on Yahoo or if you see negative news on Google, this could be coordinated, we don't actually know, by the whales who are trying to FUD and scare the market out of their Bitcoin so that they can acquire these mass buys at a lower price. That's the thing as well, is that these whales are trying to accumulate Bitcoin at as low a price as they possibly can. They don't want to be buying right at the top, so they will shake out the market and get themselves in at a lower price. Now, they do this by a combination of sharing this negative news and by making mass sells. So the thing that happens is when they trigger these mass sells, many people who are leveraged exit these leveraged positions because they don't want to get liquidated. When you are liquidated, when you're trading with leverage, you lose all of your cryptocurrency. You don't just lose a small amount, or you don't have any sort of unrealized loss. The thing with holding spot cryptocurrency, if you simply buy the asset, if you buy Bitcoin or you buy Ethereum, you can hold throughout these dips and you'll be perfectly fine. Buy, hold, look at your portfolio again in a couple days. Don't look at it minute by minute. Don't look at it on an hourly basis. Look at it in a couple weeks after this dump is completed, or after a couple days after this dump is completed. If you're holding spot, you're perfectly safe. If you're trading with leverage, again, only for experienced traders, if you want to trade with leverage, the thing is you can get liquidated, they'll hit your stop losses and you'll end up actually realizing those losses. You can't hold through these dips if you're trading with 10x or 100x leverage. So I do not recommend leverage trading unless you have experience and you understand the technical and fundamental analysis of the market, and you can combine those two together to make calculated choices about your entries so that you don't get liquidated in times like this. So looking again at the Bitcoin chart, like I've said, we could hit this $27,500 level. We've hit this 21-week moving average cloud here. And I do believe that if we do see a further downtrend, we'll hit this level, or we could make a healthy move sideways for a couple days, maybe a couple weeks before we move upward again. Now, what is going to happen in the upcoming days? Now, what do I personally expect? I think that we will see more of a downside movement, even though that's not wanted by everybody else. We have to be realistic and see what is needed for the market. If we go over to the net unrealized profit and loss, or the Nupal chart on Glassnode, we'll see that we are approaching the euphoric stage. And if we go into the past, every single time we've hit this euphoria stage of the blue right here at the top of the chart, we see these massive dumps downwards into the negative side. Although if we can prevent entering that euphoric stage, we can have a healthy move upwards. As you can see here, we enter this, have a bit of a dump, move upwards, have a bit of a dump, move upwards, rather than hitting this euphoric stage and simply crashing back down. Back in 2013, we hit this euphoric stage and the price of Bitcoin was $1,000, and then it crashed all the way back down. And then in 2017, the same thing happened. When we hit the all-time high at $20,000, we crashed all the way back down to $3,000. So unless we want a crash like that again, it is needed that we have these corrections, these smaller corrections along the way, so that we don't enter the stage of euphoria. And if we do that, if we do have a little bit more of a downside movement, we could bring this fear and greed index down. All this essentially is measuring is the profit, or how many entities are in profit right now. And right now, so many people are in profit in cryptocurrency, or in Bitcoin specifically, that a downside movement would be very, very welcomed. Now, let's look at the Ethereum Bitcoin chart. As you know, I am holding most of my funds right now in Ethereum because I did make that big move. And we're seeing some good movement here on the Ethereum Bitcoin chart. Ethereum is in this major trend pattern right here. And if it does break out to the upside, I could see it moving a big 20% movement upwards. If we measure this size of the chart right here, we've got a 20 to 25% move. And if that happens, we'll have the same movement upwards. So depending on where we break out of this chart, we could see a 4% value of Bitcoin. And that would put us at a very, very nice number. I could see us trending all the way up to $2,000 for Ethereum. But again, that completely depends on how it plays out over the next few days. Ethereum could bounce around inside of this triangle, and whether it breaks to the upside or the downside, it's going to be a massive move either way. Again, either a 20 to 25% move upwards or a 20 to 25% move downwards, which would take us back to where we were on the 3rd of January in relation to Bitcoin. But if we look at the Ethereum USD chart, I don't think we will go much further than the $1,000 level, at the very minimum $800 level. You can see right now that we haven't broken the upward trend line just yet, although we did touch the support that we had at $900 or so, $950. We've touched that and we've had a bit of a bounce. If this continues, fantastic. Maybe we can have some movement along here. And if we hold the support, we hold this neckline, I think we'll see a movement upwards back all the way to 1,500. Break our previous all-time high at 1448, which is what sort of the consensus for the previous all-time high is, and then all the way up to $2,000. But again, that completely depends on what plays out over the next couple of hours and the next couple of days. It's very, very difficult to predict because this market is so much different than we've seen in the past with these mass institutional players playing the game. So this is a major opportunity for you to load up on your cryptocurrency portfolio. If you've been looking for an opportunity to buy, now is the time. As I've said many times before, when you see these red numbers all throughout the cryptocurrency market, this is not a time to be scared. It's a time to be excited. It's a time to buy and load up on your portfolio. As you guys know, I'm very bullish on Cardano. Right now it's at 26 cents, all the way down from around 32 cents, 33 cents that we were at. Ethereum all the way back, up to $1,000 now. Again, 21% down from the 24-hour high. These are 24, 25% discounts all across the market that are absolutely needed and absolutely wanted. Synthetics Network only down 12%, 24% up over the last week, which is fantastic as well. That means that we're seeing a lot of money and a lot of power still in DeFi. I feel like the DeFi hype that we saw earlier in this year was nothing compared to what we are expecting to see in the future in 2021. The money that will flow into DeFi is going to be absolutely massive. We've got Synthetics here at only $1.6 billion. This could easily be a $5 billion asset with what it's producing. So the fact that it's holding quite nicely even during this mass market dump makes me very, very excited for the future. If we go over to the chart, the 30-day chart, we can see that we've got this major upward trend. It really hasn't broken the upwards movement just yet, so I'm still quite bullish on Synthetics. If you guys are looking to load up on your portfolio with fiat, I do recommend crypto.com. As you know, I've got a tutorial on their platform on my channel, and right now they're doing 0% credit or debit card fees for your first 30 days after you sign up with them. I do have a link in the description if you want to check it out. That is fantastic. I always buy through crypto.com because it is the lowest fees for me personally. It depends on where you are in the world, but right now they're the best that I've come across when it comes to fees and buying spot. And you can set up recurring buys as well. This is something that I highly recommend, especially if you don't want to be watching the market every single day and worrying about what price you're getting in. I get tons of DMs and messages every single day asking, is this a good price to get in? Is this a good price to get in for a range of different cryptocurrencies? And the thing is, that is completely up to you. That is completely personal and independent to where you decide you want to get into the market. Maybe now is the perfect time. If you buy at an all-time high, that was the choice that you made and you got in at that price. Although if you set up some recurring buys or you dollar cost average in, you'll be happier with the price that you got in at, because it won't be set right now at a massive buy at this point and then we dip deeper. Rather set up recurring buys or dollar cost average in, so you buy a little bit here. If we dip deeper, buy a little bit more. We dip deeper, buy a little bit more. So then when we come back up, your average buying price is lower than simply buying right up here or buying right at the top. Never FOMO in, never unload your entire bank account into crypto. Make small recurring buys and dollar cost average over time, and you'll thank yourself in the long run. Again, if you are looking to hold for the long run, it doesn't matter what price you get in at right now. Everything is so ridiculously cheap to what we're going to see in the bull market that you're probably going to make some sort of profit in the long run. Although if you do want some sort of guideline or assistance with that, check out my Patreon. I do post trade calls in there occasionally for low cap altcoins and some chart analysis, as well as some Q&As. You can ask me anything you want, and we do those quite often where we do AMAs. You send in your questions and I'll happily answer them for you in as much detail as I possibly can. Right now, I'm keeping my eye on Polkadot, Chainlink, and Cardano, and I'm loading up at these price levels. I do think these are all fantastic prices to get them at right now. Polkadot sub $8 is going to be fantastic, and I don't think we'll see this at this price for very much longer. Zilliqa is back down to almost 5.5 cents. Absolute fantastic price point. As you guys know, I am so incredibly bullish on Zilliqa. I think that in the bull run, this thing is going to absolutely explode with the transaction speed that it's got, with everything that they're working on right now with staking. It could find support at this price level, or it could dip deeper. But as I've said before, if you're looking for a price point to get in, look at the chart in this way. If something has a massive run up like this, like VeChain, we've been in a complete massive bull uptrend in the past couple months. And as it goes up, don't buy at the top, don't FOMO in, don't FOMO in here. If you're holding for the long run, sure, whether you buy here or here or here, it doesn't really matter. But wait for it to come back down and consolidate sideways a little bit before you buy in. There's nothing wrong with waiting a little bit longer. You're not going to miss the high. You're not going to miss the peak, especially when we're below the previous all-time high. We're still 30% below all-time high back in 2017. So you've got a lot of time to get into a lot of these cryptocurrencies. So as always, I recommend that you keep an eye on the market if you can for buying opportunities. But if you're looking at your portfolio on a minute-by-minute basis, it's just going to make you sad, it's going to depress you, and it's not really going to be helping you with anything. Another crypto to look at is Reserve Rights. As you guys know, I'm super bullish on Reserve. I've got a large bag of this myself, and I really do believe in this project and think that it will absolutely skyrocket in the next bull run. A market cap of only $300 million, this could easily be $3 billion. I don't doubt that at all, so do look into that as well. I hope you guys liked that video and it puts you at a little bit of ease. Don't stress too much about this market. Go have a cup of tea, go take a walk, don't look at the portfolio for the next couple days, and come back when the market is recovering. I hope you guys liked that video. If you haven't yet, don't forget to hit the subscribe button and turn on all bell notifications if you want to see this content on time. If you haven't yet, check out the Patreon, and as always, I shall see you in the next video. Cheers.